There's a research report moving through Wall Street this week that says Bitcoin could fall to $38,000. Not a troll on the internet. NYDIG, one of the most respected Bitcoin research desks in the business. And I did something this weekend that most of the channels covering that headline clearly didn't. I read the whole thing. The number is real. And the strangest part of the most bearish Bitcoin report of the year is what it admits on the way to that number, because almost nobody is quoting those parts. Before anything else, a promise kept. Back in June, a viewer challenged me, told me to save his comment. He said, "When Bitcoin is down near 39,000 around October, unfollow this guy forever." I made a video answering him, and I promised that if the evidence ever pointed his way, you'd hear it from me first, plainly. Well, a Wall Street research desk just published his number, 38 to 39,000, possible cycle low, and yes, on his timeline. So this video is that promise, kept. We're going to take the bear case at full strength. No straw man, no flinch. And then I'm going to show you the 4 things buried in the same report that change what the number means. That's the loop. Here's the payoff category up front. The report prices the road. It says almost nothing about the destination, and in 3 places, it quietly agrees with the destination. The bear case first, at full strength, because you deserve the strongest version. Bitcoin sits around 63,000 as I record, down about 30% this year, down roughly half from October's all-time high near 126,000. NYDIG points out that year to date, Bitcoin has been the worst performing major asset they track, behind treasuries, behind silver, behind the Swiss franc. Behind the franc. And their 38,000 isn't a dart throw. If this drawdown follows the shape of the resets in 2014, 2018, and 2022, the 4-year rhythm, the arithmetic lands near 38 or 39. That's the case. It's real, it's sourced, and if it plays out, everything I said about where this ends gets tested at a lower altitude. No certainties here, only probabilities. Anyone who promises you a floor is selling something. Now, what they buried. Not hidden, to be fair. It's all in there. Just none of it makes headlines because asset falls is a story, and why it's falling is homework. Buried finding number 1, and it's the whole ball game. NYDIG says this decline is being driven by leverage, not by spot demand. Their own framing, right in the title of the research. Leverage is driving Bitcoin, while value and momentum buyers wait. Kitchen table version. Picture a house on a street where 3 neighbors got foreclosed. Prices print lower, but not because the town decided houses are worthless, because borrowed money got carried out on a stretcher. Forced sellers set the price. Patient buyers set the floor. And the report literally says the patient buyers are standing there, waiting. That's a completely different disease from 2022, when the industry's own issuers, the lenders, the exchange, were collapsing from the inside. Buried finding number 2. 2025, the year inside this drawdown, was Bitcoin's least volatile year ever. In the middle of the worst stretch since the last bear market, the swings got smaller, not bigger. I made an entire video this week on what that means. The options market now prices Bitcoin as calmer than South Korea's whole stock market. So I'll just say it once here. Assets don't usually get quieter while they die. They get quieter while they change hands from tourists to owners. Buried finding number 3. Bitcoin's correlation with gold rose all quarter. The bear report, trying to explain weakness, documents Bitcoin trading less like the AI stocks that are collapsing and more like the oldest store of value on Earth. They filed it as a footnote. I'd file it as the thesis. And buried finding number 4, their words. The Clarity Act is, quote, the most important forward catalyst for the digital asset industry. The bill in its final fight in Washington this exact week. The most bearish report of the year lists the biggest bullish catalyst of the year with a date on it. Quick beat. I track how all of this moves week to week on one screen, and there's a feature on it built exactly for weeks like this one. Where to find it in a moment. So let's hold both halves honestly, because that's the whole job. Could Bitcoin trade at 38,000? Yes. The rhythm of past cycles says it's possible, and I won't insult you by pretending otherwise. Now the question the headline never asks. What would be true at 38,000? 21 million coins. Still the cap, still fixed, still forever. No issuer, still no issuer. Nobody gains a printer because the price fell. The debt that forces the printing I talk about every week. Still growing. The tokenized rails I showed you all week. Citadel's 400 million, the $53 billion bid, the freeze button, still being built, in cash, during the red screens. Here's the sentence to carry out of this video. Price measures the road. Scarcity is the destination. A report about the road can be completely right and change absolutely nothing about where the road goes. On Tuesday, I call the dip here the slingshot winding up. NYDIG just told you, with better data than mine, how far the band might stretch. Worst case, 38. What they also told you, leverage flushing, volatility compressing, gold correlation rising, patient buyers waiting, is that the spring is intact. They measured the stretch. They never disputed the spring. What this means for your savings, plainly. The honest risk is real. Anyone holding Bitcoin needs to be able to watch a 5 in front of the price become a 4, maybe a 3, without panic selling the bottom. If that would break you, size accordingly. That's not weakness, that's engineering. But understand what the bear case is not saying. It is not saying the 21 million became 22. It is not saying a printer appeared. It is not saying the dollar stopped losing 3.5% a year, officially, while you wait in safety. The report is a weather forecast. The belief on this channel was never about the weather. It's about which house has no landlord. Two scenarios, and I'll hold myself to them. Scenario 1. The cycle rhymes. We see the 30s. The challenger from June takes his victory lap on price, and every mechanism in this video is still running, at a better entry, with the patient money NYDIG described finally moving. Scenario 2. This drawdown stays shallower than the old cycles. NYDIG itself flags that possibility, and Bitwise, same week, called this darkest before the dawn, and the low is already in or near. I don't know which, neither do they. That's what probabilities mean. 3 signals, dated, checkable. Clarity's vote before the August recess. Their own most important catalyst. The leverage data when forced selling exhausts, the price stops falling on bad news. Watch for that tell. And the October date my challenger named. I'll be here either way, reading the same numbers out loud. That's the deal we made. My macro command center has a feature built for exactly this. Log in once, come back next week, and it tells you precisely what moved since your last visit. Bitcoin, gold, the whole board. So you're comparing facts, not feelings, while this plays out. Free account at timtalksfinance.com/members. No credit card. 2 minutes. And take the money quiz while you're there. It shows what inflation is costing your cash in dollars per year, which is the number the bear reports never print. 38,000 is a real possibility on the road. 21 million is the destination, and it didn't blink. There are no certainties, only probabilities. And the probability I keep coming back to is the one no bear report has ever touched. Everything else they can print more of. This, they can't. Wherever the truth lands, and this week, even the bear's own report kept landing there.